Hey there, traders. Good morning. Welcome to the new and improved, still late, my fault, Elliottwave Wednesday webinar. Todd Gordon here with TradingAnalysis.com. Bennett, we all love him. He's behind the controls here. And I don't know. I've got a ghost in the machine here, and I was holding up the operations here. But he's behind the helms, doing a great job. We've got good markets here this morning. A lot of earnings. We just hit Apple. A lot to talk about there. AMD, Starbucks, lots going on. Interesting interview this morning with Boeing CEO Calhoun. Obviously, lots with the coronavirus volatility. So this is a time when we really got to buckle in. So let's bring the team in. I'm obviously on a little laptop setup here because being a guest of the show, this is no longer my show. It's been taken away from me. Which is exactly what's supposed to happen. My regular setup isn't working. Being the guest of the show, so that's fine. I'm just a observer of the show. These fine, capable gentlemen are running the show here. Bennett, Terry, Alex. Good morning, guys. How are you?
Good morning, Todd. How's it going?
Good morning, man.
How does it
Good
feel
morning, everybody.
How does it feel to be behind the controls so far, Bennett? Stressful, right?
It is, but it's a lot of fun. I love it. I'm excited. Looking forward to it. A lot of possibilities.
You've done a hell of a job so far getting all set up. So, yeah. So just
let me take a point of order for you, Todd, before we get going here. We're not broadcasting on the channel that we set up.
Oh, it went live on a different feed?
Yeah, that's what I saw immediately. We are on the wrong channel on 22nd first.
I'm chatting with the members on the original channel that is supposed to broadcast. Can we give them some instructions?
If you could just send them the new live link. We apologize, guys. The first time getting switched over to the new control here. So
where's that new live link?
Yeah, I'm just sitting here. I've been through all of this, Bennett. I told Bennett I won't get mad at you once, I promise, because I've made every mistake. YouTube interface is so confusing. So what do we want to do? Do we want to try to get over on the right channel or bring them over here?
I think it would be best to just paste the link to the to this current feed if possible.
Okay.
We have 40 who have moved over so far.
Okay. Terry, you got that? Okay, you've already dropped the link in?
Where's the link? No, I don't have the link. Where's the right link?
Oh, okay.
I'll drop it over to you, Terry, right now. If you look at Todd Gordon's YouTube channel, it will be the only live feed currently active, which I am sending to you right now.
Are you dropping that in Slack?
Yep, just did.
Okay.
I'm not sure I can paste that in the chat box because it's a hyperlink. Let's see if it takes. Nope.
If you remove
Who's got now? I knew Todd could do it. Somebody that had edit rights in that chat window could drop that in for people.
All right, I got it right here. All right, guys, carry on. I'll handle this here in the background.
Okay. Okay.
We're going to get you guys set up here in just a minute.
All right. Well, you want me to, let's see here. Hey, Bennett, tell me, do you want me to kind of start just going through some of the earnings, or do you want to wait for people?
Yeah, let's give people a few minutes. So, guys, last week, I'll just kind of wrap a little bit, give some commentary as people are coming in. So last Friday, we saw, kind of a risk-off move there in the markets. A lot of that was obviously driven by the coronavirus. the team and I had an internal discussion just looking at the tape, and a lot of what we were seeing was some of your travel stocks, your leisures, your transport, some restaurants, and really a lot of the weakness was focused within those particular sectors. Now, obviously, Monday we had a bit of a gap down, and we saw that weakness kind of translate into some of the more traditional bull market sectors, your tech, your financials, and your discretionaries. But overall, I think just kind of a run-of-the-mill pullback within an overall still uptrending and positive market environment. So as a team, we felt it was kind of wise to just be patient and not overreact to the headlines there. So I remain bullish. I think Apple had a pretty strong report. What are your thoughts, Todd?
I agree. I feel like the markets were they were looking for a reason to come from such elevated levels to pull back. I mean, certainly we don't understand the depths of this coronavirus and all sorts of conspiracy theories, or not all sorts. There's a couple of really interesting conspiracy theories on the origin of this. If you want to get into that, we can indulge that. We don't know the depths. I think it's it's being underreported in terms of how severe it may be and implications. So I think it's, despite the earnings thing, earnings are being pushed aside. We're seeing a lot of impact, to your point, in consumer discretionary stocks, airlines, casinos, various other XLY components, and I think the growth story, specifically the move up in technology, continues to be very strong, but it's probably just pushed back at least a quarter. I feel like everything's been delayed. So interested, Bennett, to see where you guys are in terms of the wave count, but I'm almost wondering if all of this news, and specifically the Chinese virus, has forced us into a fourth wave a little earlier than otherwise would have happened. So we might be in a little bit of consolidation. I didn't do anything in my stock portfolio. I took a pretty good drawdown in terms of unrealized profits that I've gained. I was fine with it. I think that the uptrend is still in play. And if we go sideways, I will be doing some call strategies, writing some calls, and on the option side, with the trade analysis team, doing some option butterflies to take advantage of this high volatility here. Just in the fourth wave correction, if in fact, Bennett, Terry, and Alex, if that's where you guys see that we're going right now. I think there also continues to be softness in manufacturing data that just came out durable. And I also think where people are saying again that this time's different. In terms of this being a tech-led, these high multiples being assigned to technology stocks. We're in kind of a new norm that is sort of fueled by perpetually low interest rates. They're earning much higher multiples, and that's how, I guess, fundamental types are justifying move towards tech. So besides all the geopolitical and everything that's going on, they're kind of disregarding the softer manufacturing data. So again, I just still think we're sideways in a correction. I'm going to maintain the longs that I have that are heavily focused in tech in my portfolio, try to generate some return at the trade analysis team with some option butterflies, if that's what the three guys above me tell us that we're going to do.
Very good, very good. Yeah, I'm in complete agreement with you there, Todd. And if we just bring over the technicals really quick, let me go ahead and bring over the motive wave window here. We were tracking here in our blue count implications to our 1618 objective of 33.7948, and obviously we did fall a little bit short of that. Short of the coronavirus headlines. Could we have seen that? Absolutely a possibility. So at this point, I think some sort of a fourth wave development is likely in play. We do have an alternate which would kind of support this overall continued melt higher. A lot of that's going to be dependent on earnings. Of course, we have the Fed today. I think the Fed's out of the picture. I think that's going to be a non-event. I think primarily earnings will be really key moving forward here. So, we've come quite a long way, and Apple had a pretty stellar quarter. If you take a look at it, they came in above expectations on both the top and bottom line. Guidance moving forward was in line. There was a little bit of debate and discussion regarding their services revenue as they've been kind of transitioning to more of a services model, and it came in under expectations, 17% year-over-year growth as opposed to 18% from the same quarter last year. But overall, just take a look at the move that we've seen after hours there. Just a very strong move to the upside, as you can see. Futures here up over 0.3%. So I remain bullish. I think overall the implications for continuation higher are there. And what's really interesting is, as we were having this debate on Friday, as we were seeing that we were seeing institutional activity behind that move lower on Friday and continuation into Monday. But this particular zone of resistance that we were tracking with our members, the 3,300 to 3,330 area, certainly did come into the picture. And so while this count would support a very significant risk-off move to the downside, we weren't ready to position and just kind of overreact and jump along with the headlines there and suggest that this count was in play. We kind of stuck with our bullish outlook, and I remain with the same kind of view that we are going to continue higher. Whether this is some fourth wave correction or not, I think we'll have a more clear picture by the end of the week. The only other alternate from an Elliottwave standpoint would be the fact that we actually had a extended wave 1 within blue 3, a shorter third wave, which would then call for wave 5 to be shorter than 3, which would still give us that 1618.
That's interesting.
And we had equality of this correction here and this most recent pullback, which was demonstrating equality to wave 2. It was also a 38% retracement. The guideline of alternation doesn't obviously come into play here with this being both kind of a directional corrections, but it is a possibility. If we see Microsoft and some of the other names come out this week with a surprise, then perhaps we do meet that 1618 objective.
That's interesting. That's a very good call. Pulling back into 2332, interesting. What about how does the NASDAQ square up against that, Bennett?
Yeah, certainly. So over to the NASDAQ, we can actually pull a very similar interpretation out of this, which also supports, out of the summer consolidation, an extended wave 1. Wave 3 in this instance actually came in slightly greater than wave 1. And
not by much, though.
Yeah, not by much at all, and still within this overall range. So we came not too far from that 1618 upside target there. But again, this count is supported in both the S&P and the NASDAQ. So watching very closely to see how the market opens up, how we react to Apple's earnings, and what the rest of the week brings us.
That's interesting. Boy, that doesn't look like a very alarming wave count. That looks like just a pretty typical garden variety pullback.
Yep, absolutely. Couldn't agree more.
At this point, for sure. I mean, it's still within this general uptrend channel. I think if you see it break down in that smaller time frame, Bennett, where you had the green wave count trend channel on the S&P, that's where we're at. We came down, we touched that channel, bounced right back off of it. I think you're going to have to see significant penetration below that's going to tell us whether or not we're going to continue this particular leg down in this particular consolidation.
Yep. And even if this is the fourth wave in development, let's take a look at what this would call for here. So over to our blue count. This would call for more of a sideways correction. And if this is in fact the case, initial support was found within kind of our more shallow fib support zone. So I think one way or another we should have more clarity towards the end of the week. But what are you thinking, Todd, when taking a look at these two possibilities for blue wave 3?
Yeah, I honestly, I'm going to have to defer to you guys on this one. Both look pretty compelling. I think if this blue 4 that, that's going to take us through the winter, we're going to have sideways to down, then, maybe butterflies in this elevated VIX environment make sense. But based on your bullish count, we might even still have if this is a green 4 pullback relative to a extended wave 1. I doubt we're going to go right back to I think we'll probably have wave 4 that lasts at least a month based on that bullish count right there. So it's either wave 4 for a month at the green 4 degree, or the higher degree wave 4 that takes us all the way through the winter. So I feel like for now the rally is at least on hold, going sideways. And I'm not trying to talk you guys into it. You guys have been kind of running the show every day. I'm kind of focusing on new responsibilities, just onboarding wealth management clients for now. So I don't want to talk you into anything, Bennett and Terry and Alex. You guys are watching this every single day. You have the feel of the market. I'm going to take your lead.
Very good, very good. Yeah, I'm with you on that. I think it's going to be an important week to see just how the market digests earnings following the headlines that we did have, and given the move that we've seen off the 2018 lows, and even following the summer consolidation, we've come quite a ways. So a little bit of a cool off period, a little bit of a reevaluation and restructuring of portfolios is probably in order. So I couldn't agree more with you on that.
Bennett, you and I were looking at it yesterday. So with Apple's beating earnings and expectations in its jump, Apple makes up 4.5% of the S&P index and 11% of the NASDAQ index, right? So,
yep.
And it's such a heavy.
So I think because
Go ahead, Terry,
because we had such a positive move on that, I think that lends credence for us to continuing a bit more positive for now.
Exactly,
and Apple. Let me just echo this point, Bennett. Don't lose your train of thought. Apple is such a large component of so many ETFs right now.
Yeah.
This argument that Michael Berry made, about all these, this passive indexing and a few stocks control. I just can't help but think about the discussion that we all had back in August, September, October of Apple leading us out, and the indexes then completing the Elliottwave corrections that Apple did months prior. So I think that is such an important point that Apple, I think, is the leading indicator for this market. So I think we should look at the S&P, NASDAQ, but then I think we have to have a keen watch on Apple as well.
Yeah, absolutely. And after the earnings report yesterday and the move that we made after hours, that's where we kind of came up with this possible idea that, in fact, this is just some sort of an extended wave one within that higher degree third, and we are going to ultimately meet that 1618 objective. So it's going to be an interesting session here, and we'll definitely be watching the tape rather closely.
Microsoft too. Microsoft's got earnings coming out this week too, Bennett, right?
Yep, another significant component of the S&P.
Yeah, Amazon as well. So.
Yep.
Well, very good, gentlemen. Anything else you'd like to cover before we touch base with sector rotation in the Forex and crypto world? I know we're having some Bitcoin movement.
Let's hit Apple quick.
Yeah.
Let's hit the chart on Apple quick. That's not bearish.
Yeah, that's a pretty steep angle of attack that we have in development here. Terry, you were actually doing some work on this one last night.
Yeah, I don't know if I got it right. We kind of had a reset there, but some of the bank analysts had given a target of $400 to Apple, so I threw that up there just off the top of the screen. I threw that target up there, and they never specify exactly when. They just say sometime this year, right? So I threw that up there, and take a look at the angle that we're going to reach here. I had to generate an extended third wave. Maybe this is too long of a green 3. It's very extended, and usually with extended third waves, you get 5v1 or 5 matches 1. But in order to reach this 400 target, you kind of got to really stretch that. So I don't have 100% confidence in this count here. But given the fact that Apple exceeded its earnings, growth targets, and all of that kind of stuff, I got to think that the momentum's still here with it. So maybe we could see it push further. What do you think about this, Todd?
I'm listening. I just think there's been so much bad news thrown at this general market over the last 6 months and really the last 2 years, and it's just been almost increasingly shorter in duration. You couldn't throw any more at this market. It just continues to show great resiliency. So I really like this count, Terry, and I'm pretty long Apple here. I have a good size allocation. Get down to a daily on that, Bennett. I just want to see what that looks like.
Yeah, the even the larger degree there, that blue wave degree looks a little bit better proportioned. But I see the trend continuing. So I got to have conviction. The trend has got to fail through serious support levels for me to turn around and say we're headed down. So for now, just keep following the trend.
Yeah. Another possibility, even if it's a little bit more obnoxiously bullish, but if it's where you have orange circle numeral 3, I would almost look at that as a smaller degree 1-2, and then the green 3-4 you're in now is that 3-4 of a lesser degree. It's even more bullish.
I thought about that. The problem I had with that was the distance that orange one traveled versus the green one, but I don't think that's serious. I think
that's a good point.
The green tip in a flat, make sure there's no wave or degree violation there.
You could almost make green 1 where orange 1 is, and we'll have a shorter 3.
Absolutely, which would be what we're looking at in the index, is that extended first possibility.
Right, but I just think it's, guys, and somebody who's new at Elliott, please don't go to the internet and say Elliott's no good, it's too subjective. I think that all that matters is the consolidation that we've seen in January and February is likely a flat or a triangle, and what that means is that's a correction and the next move is higher. For a trading and even investing point of view, the rest of it is really just semantics, and it doesn't matter all that much, and it's certainly not a shortcoming of the methodology we use. I think the price action we've seen over the last 2 weeks is corrected when we go higher, and I think that's just how you bottom line it.
Yeah, I agree.
And I know Alex is probably just kind of fuming right now because we're not acknowledging the risk-off signals that he's seeing in the FX markets, and rightfully so. And we'll get to that, but for now, I don't think there's anything bearish about that chart.
Yeah, at this point, we're just seeing a simple 3-wave correction, across the board there. So nothing to be overly concerned about as of yet.
Agreed. Hey, I like this new setup, Bennett. Well done, you and Tristan and Joel.
Thank you. Yeah, it was a team effort. Nice. I like it. It does.
Looks really good.
Yeah, it looks nice.
Okay, gets our faces off the screen. We're not blocking the data, so that's good.
Yeah, this is much better. Well done. And guys, just a couple of people are talking about my audio. Yeah, for some reason I can't use my regular system. I just use my little MacBook Pro here to log in. For some reason, as a guest, my hardware doesn't work as being a guest, so I've been officially booted off the show. I'm like,
never. We'll get it sorted out.
I was thinking about making we're watching the morning show, my wife and I, on Apple TV. I could probably make a very insensitive joke. It is insensitive, so I won't make the joke about some morning anchor being pushed off for inappropriate behavior. Continuing on, following on, move on.
All right, guys. So let's hit some sector rotation, and I really want to spend some time with Alex in the Forex space as well as crypto. So Terry, if you're ready to give us a bit of an update of what we're seeing there in the sector rotation, given what we've seen. All right, it's coming your direction.
All right, guys, we're going to start out here with our monthly rotation. Now, the monthly time frame here, these are monthly bars on a chart. So you're going to be looking at something that's going to be more conducive to your investing horizon. In the leading quadrant, we have technology, real estate, utilities, and staples. And the only one that is moving in a northeasterly direction, which means higher relative strength and higher momentum continuing to push, is the technology sector. Real estate and utilities, they jumped into this quadrant early in the summer. They've just been losing momentum. They've been retaining a slight amount of relative strength. Okay, so I don't think they're not totally gone out of the picture yet. And here's discretionary down in this weakening quadrant. You can forget energy for a long time. I think it's going to take this guy's got to make a turn. He's got to make a serious turn with a vector north to say that he's going to start coming back out. But look how deep. Look at this relative strength is 16% below that of the S&P. That's horrible. So, you know, everybody starts talking, hey, when are we going to get into energy? When are we going to get in? Well, you know, energy's in a bind right now because there's oversupply in just about everything. Crude oil to petrochemicals and natural gas and stuff like that. So it's gonna take a while. We got financials here. Financials has moved out of the lagging quadrant up into this improving quadrant. Communications is moving over. So that's your kind of your investing timeline. If you're looking at swing to position trades, you want to probably look here in the weekly, which will give you a 2 or 3 month look ahead for the rotation. So if I go back here, you know, to let's just rotate this back to around the 1st of December. Okay, so about 2 months ago. 2 months ago, here's energy again. Here's this sharp decay in the defensive sectors. Here's a sharp rise up in the tech sector and financials. Now, as we've moved through the month of January, you can notice this sharp hook here in technology. We did have a break over here in around the Christmas time there. And financials also. Financials made a very sharp hook and has started pushing down into the weakening quadrant. Healthcare is starting to lose a bit of momentum. So right now, where we are today, we only have technology and healthcare remaining in our leading quadrant. Communications was trying to push over there. If we look at this last week we had communications showing a signal maybe it was going to cross over. Immediately took a little nosedive south. So that's kind of maybe a little cautionary thing on trying to get in. I think it was Comcast, wasn't it? Todd, did you hear something about Comcast earnings? That may have been what was
and I was just looking ahead actually to see when the CMCSA. I'm just looking at the chart of Comcast off screen here. It looks fine, just pulling back here a little bit. So yeah, I mean, Comcast kind of double topped up around 48, but still kind of supported above 42. And I was just going to do a scan of XLC stocks coming up here. Okay. Communication. So
I'm going to just continue.
Go ahead.
I'm going to continue in the meantime, and I'll let you come back to that. And we can pull up XLC in detail. But let me just finish the statement here. Financials. Look at these. Look at the length of these tails. This is the velocity. Okay, this is the velocity decay in terms of momentum. The longer these tails, the faster these things are drafting. Now, you see these tails, the financials, industrials, energy drafting lower. But here, cautionary. You see utilities. While still over here in the lagging quadrant, and real estate also in the lagging quadrant, you see a verticality here. You see a drive higher. So this is kind of the rotation that I think you're seeing is why we're in a bit of a consolidation right now. Real estate, utilities are some of the best gaining performing stocks, but not in the long term. Not in the long term yet. Okay. Yeah. So I'm going to flip over here. Let's take a look in detail at some of the stocks that I have in the communications. So here's a big long list of, this is the top 20 stocks. And you can see they're kind of all convoluted here, right? Everything that's inside this ellipse or circle, if I rescale it here a bit, you know, is just hanging around performing similar to the S&P index. The outliers, Twitter might be something good. Twitter's had this big, huge consolidation down. This big, huge, maybe that's an ABC, Todd. I don't know. You'll take a look at what do you think about Twitter?
I'm still long Twitter. It's holding on to this kind of messy, big old correction pattern in wave 4. I don't love it. I still have it. It's actually, I think, my biggest loser in my portfolio, but technically it's still okay.
Right. I know we don't like to trade Netflix, but here Netflix is jumped into this leading quadrant here.
I don't care. I don't want to hear about it.
It has crossed
I don't think
over, and I'm looking at my chart right here, and I see a nice, beautiful consolidation: A, B, C, D, E, and then we go. So maybe we got a big triangle going on here.
I don't think
can't
I've ever had
convince
a
Todd Gordon.
So
I think we
just
have one.
So for communications, obviously tonight, a lot could be decided tonight with Facebook. So Facebook is tonight. Google is going to be February 3rd, so it's going to be next week.
Facebook is buried in here in the middle here.
Yeah,
I see a little bit of a hook. It's got better performing relative strength and a little bit higher momentum, but it does have a little slightly southerly turn here in it, and we'll see how that performs. Pretty deep correction here. It's above the 50-day. It's above the 250 and the 20-day moving average. I can certainly see from here. So it's riding high. CBS took a big hook. CBS took a big turnaround. It was improving, and now it's losing its momentum. So that's communications. Let's jump over to technology, and then we're going to touch on healthcare. The technology and healthcare are the two sectors that are still in our leading quadrant. And here you can probably see why. So this is showing Intel. Did Intel have beat its earnings, or what was I forgot? Intel did pretty good. Yeah, Intel was up like 8%.
Intel did very well through earnings. Yeah, they did very
well.
well.
Intel drove really hard through its earnings report. Some of the ones that are in the decline, we do see Apple down here in the weakening quadrant, but it's got a very short tail, which means it doesn't have a lot of velocity. Look at the difference in CRM and the length of this tail, which is, in this particular, this is a one-day chart, okay? This is a one-day chart with we'll put 5 bars on it, right? So in the very short term, CRM is drafted, I don't know, 4 or 5 times faster down than Apple. Let's switch back to the weekly, because I know we want to keep ourselves focused on this particular time frame. So here's technology in the weekly performance, looking out the next 2 or 3 months. Adobe, I've been calling that one for a while. Adobe's huge. Look at PayPal coming up in the corner here. Cisco, these particular vector headings are really good. These guys are going to continue to be the next performers. We're starting to lose a bit here in NVIDIA. Apple and NVIDIA close to the border here, crossing over into the weakening quadrant. But these could easily, because they're so far out here to the right, these could easily decide to turn. They could easily decide to hook and turn and come right back up here within the next several trading days or weeks. Qualcomm is one of the ones in the semiconductor sector. I think I've told you this in the past when I looked at the correlation between all semiconductor stocks. I never saw Qualcomm being the benchmark of the semiconductor index. It almost never matched it. It is in that semiconductor group, but it just never really followed the entire group. Okay.
So AMD last night, a little soft on the earnings report. We're drifting back below 50. We need to look at some support. So we got to watch this semiconductor group that was kind of formerly leading XLK specifically, and then Alan, who is in the industry. I see his nice comment there. Alan is a CMT and in the Market Technicians Association. I'm actually going to be speaking for them. Alan, I think it's February. Is it 12th? I got to pull up my calendar. 12th or 13th in New York. Looking forward to it. Thanks for the invitation. But he brings up the point that there's only one sector in the leading quad is a bit concerning to me. I just wanted to engage that comment, see what you think.
Well, there are two, right? Healthcare and technology.
Right. So let me just make sure we're understanding this. I don't think we can have multiple, more than maybe 2 or 3, depending on the time frame, more than 2 or 3 sectors leading the benchmark indexes. There seems to be, I think it would be a problem if there were 2 or 3 or 4 indexes or sectors besides defensives like utilities, staples, real estate. If there's more lagging the indexes, I think that would be a problem. But for me, I don't see a reason why the rally that is led by continue, because there's a lot of other sectors that are not lagging, but in fact just performing at market. So if everything else is performing with relative strength, momentum compared to the index, but technology continues to be the leader, I personally, and I'll throw it out to everyone here listening for discussion, I don't see a reason why that can't continue. Everything else is just performing at market. Am I thinking about that the wrong way, guys?
No, I think you got to understand that this benchmark thing, right? When we're looking at the sectors themselves, comparing them to the benchmark, that is the sum total. Excuse me, the sum total of all of these sectors is the center of this, and I'm losing my voice here. Excuse me. The sum total of all of the relative strength of these sectors is got to be the benchmark. Okay, so this is the S&P is right here at the origin, and everything else is the reason for it. So should you be overweight technology? Absolutely. You got one or two. You got two sectors. The healthcare sector sitting over here, and then you've got all the other. You got 10 others, right? Or 9 others. You got 9 others that are all down here. The sum total of all of these has to offset the weight of technology and healthcare together in order to provide a balance, right? So yeah, just because these are all in the lagging quadrant right now, this is just showing you where the S&P is tilted, this direction, but it's being offset by the strength in technology and healthcare.
Okay. All right. I just wanted to engage that question. And Alan, sorry, I've got it in my calendar. It's the 13th in New York City. So I appreciate that, Terry. I just wanted to kind of bring that point up. So yeah. Inside the semiconductor, which is the semiconductor industry group of technology, AMD is losing a bit of momentum, but its relative strength is still 18% higher than the S&P. So is Skyworks and ON. Several of these these semiconductors that really pushed higher, right? This is carrying the entire semiconductor index here, and this is compared not to the XLK but to the S&P, right? So this can be offset because in this particular case the benchmark is not a consolidation of all of these stocks here. Okay. So I still see technology sitting over here to the right, high relative strength. There are some here that are going to start pushing into the lagging quadrant here. Teradyne, Lam Research, KLAC. All right, let's get. I heard the. Let's see here. Hang on a second, guys.
And really quick.
Oh, go ahead, Bennett.
I was just going to say, in regards to AMD, it was actually a beat both on the top and bottom line. In fact, fiscal year 2020 guidance was in line, but going into the next quarter, they actually guided down. So certainly seeing a little bit of weakness there. We were actually looking for that fourth wave pullback in the SMH and in NVIDIA. And, if you take a look, AMD was up some almost 90% since we recommended it to everybody back in October. So not surprised to see a bit of a pullback there.
No.
And all right, let's take a look here.
Terry, wait. We should mention also, leading this morning, so the bell's open, the bell rang, markets open, technology second place being led by industrials. And we have XLI up 1.04%. GE reporting earnings up a good 8, now 10%. We about GE last week on CNBC. I put the trade on. As I said on the show, I'm long from $11.69. We're trading $12.88 right now. Just not a huge position. Just 200 shares, no big deal. Just a little allocation of the portfolio. But GE's been looking well. Norfolk Southern up 5.8%. Textron, and then Boeing up 2.95% following earnings as well. So watch those industrials kind of leading to the rally here today.
Very good.
Yeah,
Terry?
AMD down 6%. Oof.
All right. Is there anything else we wanted to cover there?
We'll switch it over and let Alex cover some things here. But the healthcare is your other sector in the leading quadrant, and you can see it's heavily tilted high relative strength. In general, the majority of these, this top 20 of the XLV. I still like Eli Lilly. United Healthcare has been losing some momentum, but retains high relative strength. I like that. Some of these biotechs, though, I've been telling you guys, you know, the biotechs, they came into play earlier on, and now they're starting to push themselves out. So you're seeing a whole general rotation in the healthcare group. You're starting to see some of the healthcare providers like United Health. They're up in they're much higher up here in the relative strength. They're starting to push lower here, and so we're getting a general rotation. I think some of the pharmaceutical industry groups now is rotating into control. Danaher and Johnson & Johnson, and here's Pfizer over here.
Very
All right.
good. Very good.
Okay, Bitcoin, please, Alex. That's what everybody's saying here. I'm going to give you the screen, Alex.
Sure.
Switch it over for you whenever you're ready, guys.
All right, you have control, Alex, sir.
Okay, I'm gonna start with Forex. So let's see what's going on there. I prepared for you one chart, which is we have been kind of monitoring this copper uprise, and we were not so long as the market was, and this was proved to be correct. Aussie is still moving down in correlation with copper. And I think that the copper still has some room to go to the downside. So from the lows in 2016, we have 5 waves up, and I think that now we are still moving lower, which is a kind of a little bit risk off. And Aussie and commodity currencies, also some other commodities correlated with the US trade war on like wheat and soya. It's all moving down because of the fear of coronavirus. And this is a little bit a risk-off scenario as well. Aussie is moving lower. Also, New Zealand dollar is moving lower. And I will show you also euro. And we have been bearish almost for the last few months on euro. And I'm seeing now probably a nice confirmation of that. I still think that we are going to go back to 106, 108, which was our target for the last year or so. I don't see nothing impulsive. I have, although, the bullish wave count, and I'm waiting this 786 to be passed through. I'm going to then turn totally bullish, bearish on euro down to these levels. So back to my dollar yen, we have seen 5-wave move from the recent high. Still doesn't mean that much, guys, but nice indication while the S&P was going lower. And now I'm going to still focus what we are going to have here. Fed meeting is today. I think as most of the market, it's going to be probably non-event. But I'm looking here for possibly a complex correction, and I'm looking to be short since the yields are taking traction on the downside as we kind of reiterate here the last few weeks. And also some of the wave counts we have been tracking on CAD yen, which is also a yen pair in a risk-off environment, has a very nice 5-wave move from its highs. So for now, our overall resistance levels works. We didn't invalidate the possible triangle wave count. And I'm tracking this quite closely for a possible 5-wave move down in a wave 1. So I'm not so bearish on stocks still. I have some certain levels to watch. I think the S&P, if it breaks 3,150 to 3,180, we're going to be in trouble. For now, I'm neutral. I'm just watching what's going on. So on cryptos, Bitcoin is still pushing on the upside. I think we are still doing this 4th wave consolidation before we have a final push up in the 5th wave, which is going to be close to 10,000. And then I think that the correction which will follow will reach back to 8,000, 7,500, 8,500, and then we're gonna probably take some longer term trades on cryptos for the possible move upside above 10,000, and we have some higher targets, but let's discuss them as the trade develops. Ethereum as well is going up, definitely 5-wave move. So we have a nice Elliottwave structure. We are waiting for some consolidation, push up in the orange wave 1 and pull back in the wave 2 or B. And we are going to be ready with our members to take some longer term positions. Also,
Alex,
I would like to,
Alex,
yeah.
Alex, can I push back on you 1 sec? Either, yeah, pull up Ethereum. So being that Blue 2 back on December, you know, the last part of December was run at. Are you thinking that using the guideline of alternation that room numeral 4 is just a zigzag and complete?
That's also one possibility. Maybe this is just a zigzag, but wave 2 and wave 4 are relatively. Wave 4 took a short time, 618 here. So
2 is a sideways correction. So guideline of alternation says 4 is short and directional. It's not typical, but it's possible.
Yeah, but still we are trading here at a possible B wave. So I'm not excluding we might shoot on the upside. Anyhow, our overall stance has been bullish, so I'm waiting the pullback for the longer term entries. So I'm not going to be involved until I see a triangle here. If I see a triangle, we might put a trade for a last 5 move. If we go directional on the upside, anyhow the 5-wave move will be done and over, and the correction will follow. So in either case, I'm not going to become immediately bullish until I see a little bit more advance here. So we are not taking out these highs yet on the Ethereum. So I'm still going to kind of wait and see here. Are we going to stay a little bit more here? Also, if we have in mind that correlation and between the Bitcoin and Ethereum is almost 95%, we can have the same case on the smaller time frame. Maybe this was already a wave 4, which took very short time, and we are already moving in the wave 5. So I'm not excluding that. So I have these 2 options. But anyhow, in this stage, in this late stage of this orange wave 1, I'm prepared to do a trading only if I see this correction taking more time. And on the upside, we are going to be, if we shoot directly, we're going to be close to the resistance levels. I'm going to wait to pull back, and then we're going to take a longer term trade on cryptos. So for now, our wave count is working well on the overall time frame. We have this 5-wave up in green wave 1 or A, down in B or 2, and now we are moving above this channel. And when we complete the 5-wave move, we can be at least to some point certain that we're going to get at least a measured move in the same direction, which might take us, if we take that orange wave 2 will be here, at least 14,000, and from there we will see. As you know, I'm conservative, so I'm going to take it one step at a time.
Very good. So just curious, how does the Bitcoin dominance chart look, given what's been transpiring there in cryptos?
Bitcoin dominance chart is sideways, still looking bullish for Bitcoin. We are tracking that extensively with our members because they're trading crosses as well. So we do analysis on crosses in cryptos. So this is a Bitcoin dominance. We are still kind of, as you can see, a 1, 2, up in 3, down in 4, and now we have a final 5-wave move subdivision. I still think this is a 3-wave move to the downside. We still didn't invalidate the major rule in the Elliottwave rules. So move down looks like an ABC for now. There is a trend channel resistance. Still looking for a push upside in a wave 5, and then I'm looking alts to outperform Bitcoin for some time, because I think after we have this 5-wave done, we're going to see an ABC pullback to this 52 zone, which means that we might see explosion in altcoins. I don't know what that will be a fundamental reason, but technically, certainly that is very possible, and it might occur very soon.
Very good. Much appreciated,
So
sir.
for example, yeah, I'm going to show you just, for example, some of the altcoins which are known only to the crypto traders. For example, we are looking this EOS, Tronics. They're all developing some of the bullish wave structure, still not unconfirmed, but some of them are candidates to push largely higher with these breaks, which might present a dominance chart. So we are tracking that, and we plan to position ourselves on these altcoins as soon as we see the dominance charts finish the 5th wave on the upside.
Very good. Much appreciated. Thanks for touching on some of those some altcoins as well. It's going to be interesting to see how things continue to transpire in the crypto world.
Yeah, definitely. I think that
wanting to look at gold too before we exit here real quick. So
yeah, let's take a quick look at gold.
And on how much further can gold run before it loses its wind in the sails?
Yeah, actually on gold we have several scenarios, and this one says that we are actually in the final move up in the C wave. So this will be let's say a larger time frame. So we are looking for a move down in A. This will be an A, flat in B, and 5 waves up in C. So I think we are in the last stage. I think this 4th wave will be some type of a triangle or an ABC move. And I think we have a little bit more upside on this bearish wave count. But if we start to kind of penetrate these bearish wave counts on the upside, I think that if we cross 1,750, I'm going to start to look bullish on gold. So that's just one remark. We still don't know if this is a 3-wave move, which we are actually looking here. That all depends with inflation, deflation scenario, stock market, and dollar yen. So I'm going to wait a little bit, and of course I want a confirmation in a clear 5-wave down here on gold to confirm this bearish wave count. I'm not going to be saying that the gold is just going to do ABC and short it here. Definitely not in this current global macro environment. So I will be careful here with this type of statements.
Very good. Much appreciated, Alex. Thank you for giving us a little bit of a review there on gold. Anything else we want to touch on here before we wrap things up?
I think that's a wrap.
All right, very good. And guys, we do apologize for the little bit of an inconvenience this morning with the link snafu. We apologize, but first time getting it switched over here, so thanks for bearing with us. We appreciate it.
You did a great job running the first show, Bennett. There's going to be some ups and downs as many times as you do dry runs with this YouTube kind of live stream setup. There's inevitably going to be trip ups, so you'll get it. Job well done in your first time out.
Appreciate it, Todd. And Terry, Alex, thank you, gentlemen. And members, we'll see you in about 15 minutes.
Yep. Don't forget, check us out at TradingAnalysis.com, guys. And obviously, full service foreign exchange, crypto, stock option, portfolio management. We are a one-stop shop for everything trading. So come check us out. As Bennett said, members, we'll see you in 15 minutes. And that's it for me. Anything else, guys, we forgot to hit?
I think that about covers it.
All right. Great job. First time out, Bennett.
All right. Thank you, guys. Have a good one, and we'll see you all next week.
See you guys. Have a nice week.